Want to grow your money safely without stress or daily market tracking? Then Benjamin Graham's Defensive Investor Plan is for you. Welcome to Day 5 of Investing for Beginners, Graham in simple words. Today we learn the most famous part of Graham's strategy, how a defensive investor should invest their money safely and wisely. Graham's primary advice is simple: keep your portfolio balanced. 50% in stocks and 50% in bonds or fixed income instruments. This balance protects you from big losses and keeps your wealth stable. Even if the market changes, your proportions should not. Graham says, never hold less than 25% stocks. Never hold more than 75% stocks. The same rule applies to bonds. This prevents emotional decisions. This strategy works because it is simple, safe, and balanced. When stocks go down, bonds protect you. When bonds go down, stocks grow. You are never fully exposed to risk. For stocks, Graham recommends large, stable companies. Long history of profits, moderate pricing, companies with low debt, basically, reliable businesses, not trends. For the bond or fixed income portion, high-quality government bonds, high-quality corporate bonds, fixed deposits, debt mutual funds. This part provides stability and predictable returns. To maintain your safety, rebalance once every year. If stocks rise and become 60%, shift 10% back into bonds to return to 50-50. This discipline protects you from emotional decisions. Graham says a defensive investor won't become rich overnight, but will be safe, steady, and confident for life. This portfolio plan works for beginners, busy people, and anyone who wants stress-free investing. This was Day 5 of our series. Tomorrow in Day 6, we explore the Enterprising Investor Portfolio Plan, for those who want to put in extra effort for higher returns.